It's July 2026 and the summer market is officially here, but it's not the market that we've gotten used to over the last 5 years. And in this video, I'm going to show you exactly what is shifting and changing in the New Brunswick real estate market. But first, we're going to talk about what's going on across Canada, look at the nation as a whole, and then zoom right in specifically to New Brunswick. How's it going, everybody? And welcome back to the channel. If this is your first time here, my name is Brandon Vincent. I'm a real estate agent with eXp Realty. I've been actively selling real estate for over 7 years here in St. John, New Brunswick. My goal on this channel is to bring you relevant real estate information in an entertaining way. If you like the sound of that, do me a favor, hit the like, subscribe button, follow along for the journey. If you have any questions about what I'm talking about here, or you have any questions about the real estate market, feel free to drop a comment down below. I'll be happy to get back to you. And without further ado, let's dive into this July 2026 summer real estate market update. So starting off looking at the jobs across Canada, because that is one of the foundational aspects of our economy. Everything else is downstream from the jobs, people working. If there's a ton of unemployment, bad things happen in the economy. If there is lots of employment, the economy is obviously doing better. Growth, all that's good for the economy, right? So that's why we start off looking at that. So according to data from StatsCan released Friday, the moderate addition of jobs helped edge down the unemployment rate slightly to 6.5%, matching where the rate was in January. StatsCan said the jobs gained in June were largely concentrated in part-time work and in accommodation and a food services, wholesale, and retail trade. Now, BMO's chief economist, Doug Porter, made a very good observation, saying that the figure shouldn't be taken as too much of a positive sign, as the hiring might be temporary because of the World Cup. He said, while encouraging results overall, one shouldn't mistake this as a show of strength. And then given the possible FIFA-related impact, CIBC economist Andrew Grantham says it's possible that the recent employment growth could stall once the event is in the rear view mirror. And the last thing that I want to mention on this that I think is important is the fact that they mentioned the jobs data also indicates a better student summer job market than last year's job market, which is very good to see. The last thing you want to hear is that youth are having a hard time getting into the workforce, especially the ones that are looking to get experience just starting off. We don't want it to be hard for them to go out and find work. I think it's super important that an economy is able to get the youth in the workforce because they're going to be the future, and getting them experienced in the workforce is super, super, super important. Now, both economists have agreed and said that the mild report likely won't do much to encourage the Bank of Canada's next move on interest rates. But wait, this just in. The Bank of Canada has announced that they're going to be holding their interest rate at 2.25%. And the Bank of Canada has also said that it expects the Canadian economy to improve despite the flatlined growth over the last 18 months. But there are big caveats. Although the economy is showing signs of improvement and inflation is easing, the Bank of Canada's new monetary policy report released today warns that uncertainty driven by the U.S. tariffs and the war in the Middle East could knock potential growth off course. And that's just it, because there is so many things currently happening geopolitically that are uncertain, and nobody knows exactly how any of these cookies are going to crumble and where the dust is all going to settle after the majority of these things are done. With the U.S. tariffs, with the war in the Middle East, there's a lot of unknowns right now, and that has everybody just very much watching to see what is going to end up happening. So the Bank of Canada indicates that the level of gross domestic product, GDP, was roughly unchanged from the first quarter of 2025 to the first quarter of 2026. GDP growth was close to zero, weaker than the 1.5% that was projected back in April. And the growth was dragged down last quarter by several temporary factors. According to this report, this includes an unexpected decline in government spending, a fall in motor vehicle production, and a sudden drop in oil and gas investments. They say that housing activity has also dropped in the first quarter, hampered by affordability challenges, slow population growth, and elevated economic uncertainty. However, the consumer spending remained resilient last quarter, despite elevated uncertainty and higher gas prices. And then real quick, we'll talk about inflation risks from the Bank of Canada, the outcome of Canada's trade relationship with the United States, and the war in the Middle East remain the two biggest risks, which could drive up costs of living. Very interesting that they said could when I feel as though it already has driven up the cost of living. The headline inflation has risen above 3%, but could come down if oil prices and gasoline refinery margins decline. Inflation, excluding gasoline, remains near 2%. So even at the highest level, the Bank of Canada is looking at this and they want to wait and see what transpires. They need more data to figure out what the best options are. And right now, their best option is just to hold for the 6th consecutive rate hold. So we're going to be keeping a close eye on this for future market updates. Now let's take a look at the Canadian real estate market and what is going on nationally here in our beautiful country. And this just in. CREA downgrades the housing market forecast again as June home sales edge up. And this article from CBC says June home sales edge up by 0.5% from May, while inflation continued to rise. High oil prices fueled inflation and spurred the possibility that the Bank of Canada would raise interest rates, sending bond yields up and causing fixed mortgage rates to jump earlier this year. These factors have eased somewhat since then, according to CREA, but the association says they still weighed on the housing market in recent months, as did a quicker than expected drop in Canada's population. So taken together, the national sales forecast for 2026 was revised slightly lower, reflecting the weak first half of the year and a slightly delayed start to the long-awaited recovery. CREA had previously predicted a small increase in the number of homes sold in 2026, but it now expects a 1.4% decline compared to 2025. The revision is another downgrade from the 2026 forecast, as CREA already revised its prediction for this year downward in April. So when there's a lot changing in the world, revisions are necessary, okay? Because the world currently does not look the same as it did in January. And that is the thing with the real estate market. And that's why it's so important to stay on top of what is currently going on around the world and also here in Canada, but also in our individual provinces, because there's so much changing and all of this does have direct impacts on the real estate market. And that's why I do these videos. So thank you for following along. Now we're going to look at some average home prices across Canada. Starting off with BC, for the month of June, their average home price was $946,431. And then for Alberta, their average home price is $537,505. For Saskatchewan, we have the HPI benchmark prices at $385,900. And then we have Manitoba with an average home price of $398,700 for the month of June. Ontario with an average home price of $831,595 for the month of June. We have Quebec with an average home price of $568,427. And then moving into the Atlantic, we only have the HPI starting off in Newfoundland with $558,000 for the month of June. Then moving down to Nova Scotia, we have an average home price of $431,700. And then for New Brunswick, we have a HPI benchmark price of $342,600. And then if we can find it on this map here, we have PEI right there with a HPI benchmark price of $383,300. Now we're going to zoom into New Brunswick. The unemployment rate in New Brunswick was 7.2% as of June 2026, which is up 0.1% from the previous month. And the unemployment rate stood 6% below the peak from June 2020 and is below the long-run average. There were 400 fewer full-time jobs in June 2026 compared to a month earlier, combined with a loss of 1,300 part-time positions. This led to a decrease of 1,700 total jobs in June. The full-time employment was down 3,800 from the peak in March 2026. So a loss in full-time jobs for the month of June is definitely not ideal. That's not what we want to see here. Now, in saying that, it is important to note that we are well below the long-run average. So we're still sitting at a very good unemployment percentage compared to the average of where we've been in New Brunswick. And just looking at this chart here of monthly full-time job growth, we've only had 6 months in the last year of monthly full-time job growth. And, one of those months was pretty well irrelevant, almost nothing, almost a loss, right? So this is something that we definitely want to keep an eye on and that we will be revisiting on every single market update to really have a good idea of what's going on. It's also very interesting to dive into the sectors as well. So we've seen a tremendous amount of job growth in the healthcare and social assistance, upwards of 6,000. That is incredible. We've had a lot coming in on the information, culture, and recreation. That's probably a lot to do with this time of year, summer tourism, things along those lines. Wholesale and retail trade had the third largest growth here, followed by accommodation of food and services, getting back to tourism, and then a very small amount of growth in construction. But we've seen our biggest losses in what's called other services. So everything except public administration, and then also public administration taking massive amounts of losses. And then we've also seen a big cut in the forestry, fishing, mining, quarry, oil, and gas as well. And then in agriculture and in manufacturing, transportation and warehousing, and professional, scientific, and technical services. Now, here's an article that was published by the Telegraph Journal back in June 22nd. And they're saying that the population drop will affect the New Brunswick real estate market, experts warn. So the lower demand means prices are unlikely to keep rising, says the Chartered Professional Accountant of Canada. Now, it does say that New Brunswick will be hit hard by the national downturn in the real estate market caused by a population decline, which is predicted by the Chartered Professional Accountant of Canada, but it won't be slammed as hard as major cities like Toronto and Vancouver, is his prediction. My thoughts are that New Brunswick is still one of the most competitive housing prices in all of Canada. And I think that that's going to continue to make us a very enticing place for people to come to. Also, the lifestyle that we have here, I've been saying it forever, but I think that that's going to continue to help us to remain strong in our real estate market. I don't think that we're going to see major declines in prices, especially here in St. John. We have some of the lowest home prices in all of Canada. So that makes it much more enticing for people moving here. A lot of first-time home buyers coming down this way as well. So I think that that's going to help us maintain some strong home prices, despite having a population drop. And now we have our 4 markets here in New Brunswick with 4 completely different stories between Fredericton, Moncton, St. John, and the Northern New Brunswick region. Starting off with Fredericton, having the top price in their sales year over year being $269, which is up 1.1%. And then you have their median home price for the month of June being $395,222. And their sale to list ratio is 99.7%. So that's saying that their properties are selling very close to asking, very, very close to the asking price. And I imagine some of them are actually probably going over, while some of them going a little bit under. Their days on market are 22, so that's very quick. And their months of inventory are 3.1, so they're very much in a seller's market. Moncton is seeing a drastic change from the last 5 years, and their sales year over year are at 323, which is down 4.7%. Now, their median home price is $375,000, and their sale to list ratio is 97. So saying that the majority of homes are selling near the asking price. Well, not all of them are. And the days on market are 36. So they have the second highest days on market of the 4 regions in New Brunswick, and they're at 4.5 months of inventory, meaning Moncton is technically in a balanced market. St. John, which is one of the tightest markets in New Brunswick, they have 212 sales year over year, which is down 6.6%. And then our median home price here is $356,250. The sale to list ratio here in St. John is 104.2%, meaning the majority of properties are selling over the asking price. And the days on market here are 21 days. So we have the lowest days on market of any of the 4 regions. Well, our months of inventory is at 3.4%, putting us into a seller's market for the month of June. And then Northern New Brunswick, we can't forget about them. They are the most affordable. They've had 170 sales year over year, which is down 11.5%. Their median home price is $230,000. The sale to list ratio is 93.9%. Days on market is the highest in the province at 54 days. And their months of inventory puts them near a buyer's market at 5.8 months of inventory. I make these videos so that we can all stay informed together on what is going on in the market. If you did like this, make sure to hit the subscribe button, follow along for the journey. Shoot me a comment down below letting me know that you've watched the very end. What was your favorite part? What questions do you have? I really, really appreciate you guys that do watch and do support this channel. It means the world to me. And make sure that you stay tuned for more market updates down the road.